Hi folks, Scott here, and this is the wrap for Friday, September 20th, options expiration day. Not the most interesting day other than what it did. Pretty steady sell-off all day. Profit taking, orderly, nothing unusual. We did close below Thursday's lows. And so what I thought I'd show you going into tomorrow, if I can get my mic adjusted right, a correction going into Monday, was fading gaps after at least a 1/2% lower close. 1/2%. I measured that on a daily cash index. We closed 1709 versus something like 1721, 22. So that's a little more than 1/2%. And I want to show you the results of fading gaps after such a scenario on Monday specifically. So fading the gap on a Monday after a 1/2% lower close. I'll be using GapTrader, my back testing tool, which you can get a full-blown demonstration of, as well as RangeTrader on Wednesday. Sign up on our website. We're going to do some really cool demos, show you what's capable with systematic trading. If you missed our webinar yesterday, it was a good one. I showed you a lot of the reports and information available out of them, and we'll show you how easy it is to get them on Wednesday. So be sure to sign up on our homepage on the calendar. All right, so a couple of things stand out here. 2-to-1 odds of gapping up on Monday. That's what this shows. And if we gap up using an end of the day stop, only 27 or 60% of the 45 historical trades actually filled. And a 0.5 profit factor means it lost a lot of money, even though the majority of trades were winners. So that is indicative of a potential trend day developing to the upside. So don't overread or overreact into the sell-off on Friday. That's pretty typical, not unusual, and we could get a immediate bounce back. I'm not saying we're going to, but we certainly could, and this puts us on notice to watch out. A gap down using the end of the day stop has been historically very strong after closing that low, and this is also above a 200-day moving average, not looking at the 10-day moving average. But these are strong numbers. I'll rerun them for our members on Monday morning using our MTG stop parameters, and as always, defer to our gap guides and my morning worksheet, the daily worksheet, that I'll actually be posting here in just a few minutes. That'll be available to members all weekend. That summarizes our gap guides and shows you any other unique patterns or unique day factors that you might want to consider for Monday. All right. So let's go to. In fact, let's go to the worksheet right now and let me show you what we showed for today since about 6 p.m. last night when we posted the worksheet. Hold on, I'm trying to get comfortable here. Back's a little tired. Gonna kick back. If I can get my desk to adjust. I mean my chair. Oh well. I was trying to make it recline. You know how you got the little flange thing, that handle that sticks out? You're supposed to be able to pull it out and make the thing go back. This is embarrassing, but I really need. There we go. Sorry. Been a long week for the back. All right. How about that for a professional video? Sorry. Okay. So let's look at the worksheet. Let me show you what I had going into. Believe me, it was worth the wait because I'd have been very crotchety for the next 5 to 10 minutes. All right, the worksheet here showed going into today, any gap up was definitely tradable, whether we gapped above the highs or between the high and the close like we did today. 68% historical win rate, 1.5 profit factor, and that's the average of the gap guys for all 8 indices. So at a glance, you know, gap up looked good and a gap down didn't look too bad either. You also know that any gaps between the high and close, these opening areas, 84% of them historically, an average of over 1,000 gaps occurring in the various indices over the years. Looked at from 3 different systems, 84% of them went on to hit the extended target before they would have stopped you out, if they would have stopped you at all. So that's a pretty darn good number for holding some for the extended target. And then today was OPEX Friday. If you follow me for a while, you know it tends to be a pretty good day for shorting up gaps. And let me show you my pre-market comments. I'm just going to jump right into it because the data was pretty good. Last night's wrap, fading gaps on OPEX Friday after a 20-day high on one of the 2 prior days went above it. That occurred on one of the 2 prior days went above the 200-day moving average. Strong numbers. pretty much any pattern you test on OPEX Fridays can be good for shorting up gaps. Fading small to mid-sized gaps on a Friday after a 20-day high close on one of the 2 prior days. Also, really strong numbers there. I mean, that's just off the chart good. In general, up gaps on Fridays are good days to fade the gap. And this morning we got really a gift. The markets rallied. It looked like we were going to open down. In fact, you'll see my comments were a little bit biased and prepared for the downside, and then we rallied a few minutes before I had to post these around 9:20. But bottom line, and positive setups for up gaps similar to yesterday. Unique pattern data was positive for shorting up gaps, and I said as long as we have at least 1 point of opportunity, meaning opening greater than 1718.5, and at least 2 of the other futures markets also gapping up, then I will fade the open with a reduced position size. Probably should have clarified, but I wasn't sure at the time I had to type this because it was rallying, and frankly, the bigger it got, the bigger size I planned to use. And I just didn't have time to explain that because it caught me off guard and I was short on time. And what I mean by that is, had it been probably another point or 2 bigger, I would have done a full size position. But I still did a 75% position, went short at the open, and let me show you this. The high of the day was made pretty much at the open. See, the white line is where we opened today. Sold off immediately, and I got a 1.25. It was filled at 1787.75. I went for full gap fill and made 1.25 points, not a lot, on 2/3 of my position. And then I held the last third for a test of the 4 p.m. close, and that was down here at 1715.50. So if you look on the ETFs, you'll oh darn it, they were ex-dividend today, so it's distorting. But the relative close, that's why they look like they gapped down today. The relative close for the 4 p.m. was down here. So whenever we have this large closing variance, as I call it, I'm almost always going to hold some of my, and it's a good gap setup, I'm almost always going to hold some of it for that 4 p.m. closing price, because I know in a relative sense that's where the ETFs will have to go in order to fill their gaps. So no-brainer decision in that regard. I traded it conservatively. In fact, I had I did catch it in all my accounts except for one. I have an IRA, which is a decent sized account, and got a little bit greedy on it, held out for 1719.25, and I was going to go for the whole position for the extended target. That would have been a 3.5 point win on a 75% position size, and as luck would have it, and often happens, the best setups don't even go against you at all. I didn't get filled at all. Some other members reported doing a delayed entry also, and they regretted it. I just don't want to miss the best setups, the ones that fill immediately. So I averaged just shy of 2 points today on another good size win, another good size position for my accounts, and 15-minute first hour ranges did not show anything special, unfortunately, because we really did sell off nicely the rest of the day, but I didn't do any other trades. Just one nice fat win, and I called it a day. So there you go. That is the wrap for Friday, September 20th. Have a great weekend.